Euro dollar. So there's no denying the intensity of this downtrend in the euro, with the market breaking to yet another multi-year low below 105 ahead of this latest minor bounce. However, technical studies at this point are severely oversold, and the market is begging for a correction over the coming sessions. But a break back above the recent high from Wednesday at 107.17 would be required to officially alleviate immediate downside pressure. Clearly, the market is now focused on an eventual retest of parity down below, but again, with technical studies so overextended, it's possible that we see over the coming sessions some form of a corrective bounce. If we do see this correction play out, that now previous support will act as resistance. That low from the 26th of January at 1098 should be a formidable resistance point. Sterling dollar. So cable has recently confirmed a lower top in the 155.50 area after breaking down to fresh 2015 lows below the previous low from January at 49.51. This sets the stage for an eventual move down towards the 143.50 area. At the same time, the market is looking a little stretched intraday, and we could see a bit of a bounce over the coming sessions. Ultimately now, the market should be very well capped on rallies ahead of 154 in favor of continued downside. Dollar yen. So dollar yen has preferred to stall out a little bit in recent trade after breaking above that previous 7-year peak from December, trading just over 122 thus far. The move above 121.85 does set the stage for an eventual upside extension towards the next measured move extension upside objective into the 128.15 area. However, again, with technical studies potentially looking a little bit stretched, there is risk for some form of a short-term pullback before the market asserts to the upside. At the same time, any setbacks should continue to be very well supported in the 118 area, with ultimately only a breakback below 115.55 to negate the highly constructive outlook in dollar yen. Euro Swiss. So we've seen the Euro Swiss market recover significantly after that critical and historic sell-off that we saw several weeks back, with the market recovery extending into the 108.15 area thus far. Since then, we've seen a bit of a consolidation, although the recovery structure clearly remains intact while the market holds above previous support at 104.15 from the 9th of February. At this point, a higher low is sought out ahead of a break above 108.15 and towards the 110 level further up, while ultimately only back below 104.15 would compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie has recently broken down below the previous multi-year low that was set in February 3rd at 76.25, with that break opening the next downside extension towards a measured move objective at 73.35. At this point, only a break back above 79.13, that previous now confirmed lower top, would negate the current bearish outlook, while any rallies should be expected to be very well capped now ahead of 78. Dollar CAD. So dollar CAD has been trading back towards the upside, with the market now stalling out just ahead of that critical recent high, that 5-year high from the 30th of January at 128. The market is favored to eventually break above 128 towards the next measured move objective at 130.65, although until it does, there could be additional consolidation while the market continues to sort of wait and see for that next major breakout. Any setbacks, however, should be very well supported ahead of a key base now in place at 123.50, with only a breakback below 23.50 to compromise the constructive outlook. Kiwi dollar. So Kiwi is looking to carve out the next medium-term lower top at 76.14, but has yet to confirm that lower top and it needs to break below 71.76 to confirm. A break below 71.76 will confirm and open the next measured move downside extension towards 67.35. But in the interim, the outlook continues to be quite bearish, while with only a break back above 76.14 to negate this outlook. SPX 500. So the SPX 500 continues to show signs of topping over the past several days, with the market trading down to 2040 thus far. A break and close below 2040 will continue this pullback and open the door for a more significant acceleration back towards psychological barriers at 2000. Any rallies are expected to now be very well capped into the 2067 area, while only back above 2105 would compromise the current toppish outlook. Gold. So gold continues to extend its declines, with the market breaking down to a low of 1147 on Wednesday in Wednesday trade, and this puts the market dangerously close to a retest of the 2014 base multi-year low at 1131. At this point, we're going to need to see a break and close back above recent highs around the 1165 area to take the immediate pressure off the downside, while inability to do so will keep that focus on a retest of 1131. At the same time, there is still the possibility that this market is trying to carve out a more meaningful longer-term base, but again, we'll need to see some constructive price action over the coming sessions and the market avoiding a retest of 1131 to confirm. That's all for now.